there's always a changing of a guard, when time moves on. And Putin's obviously recognized a chink in our armor. I'll tell you that. So maybe he takes advantage of this. I've been watching the ruble. I've been watching it for 6 or 8 weeks now with the unfolding of things. Ruble plummeted in value early on in the Ukraine crisis, but you look since I think about the third week in March, the ruble has strengthened. Okay, you look at they basically fixed the price of gold at 5,000 rubles per gram, and that has had a profound effect on the value of the ruble. It's really stabilized the ruble by pinning it to gold. If we would be so bright here in the West to do that, I think you'd see some very, very dramatic things happen for the better. But unfortunately, it's not happening. We're still trying to use the political clout that we did with when we had, the dollar was the be all and end all. That's not happening anymore. It's changing.
Welcome to this RTD interview. Today, I'm excited to have returning guest, Dr. Quinton Hennigh, an economic geologist, as well as a key investor in a variety of resource companies. Today, Quinton joins us to share his thoughts on the economy, global financial system, as well as recent updates in the mining space. So, Quinton, how are you doing, my friend?
I'm doing great, Mike. How are you?
I am excellent. Excited to connect. As I mentioned, it's been a while since we've talked, but looking forward to getting caught up on what's been happening in your world, as well as getting your thoughts on all the things happening around us. But before we do that, if you don't mind, give us a brief snippet for those that might be new to the community, a little bit of your background and how you've got to this point in your career.
Yeah, look, I guess my title is career is economic geologist. It's really a fancy word for a modern day prospector. And I've been working in the mining industry for about 40 years now. I started working underground in a gold mine here in Colorado when I was 16. I worked there through university in the summers, and then I went on and did my master's PhD at School of Mines. Went to work for major mining companies, including Homestake, Newcrest, and Newmont. And about 2007, I decided to venture out into the junior space because that's really where the future of exploration is situated. So I moved over into the junior world, 2007, been in that for about 14 or 15 years now. And more recently, I've joined Crescat Capital as their technical and geologic director to advise them on investing in junior mining companies.
All right. Sounds good. Well, I appreciate you for sharing that. And definitely lots of things have gone down since we last connected. But given where we're at now, April 2022, what's your current assessment of the global economy as well as economy here, and what concerns you, what excites you? Let's start off with that, if you don't mind.
Yeah, I guess, the appropriate word for the past few days is volatile. I mean, it's just been an absolute roller coaster on all levels, commodities, but also the stocks and bonds and stuff. Everything is shaking up right now. And in currencies in particular, I noticed more big movements in currencies lately than I think I've seen, in a long, long time, perhaps in decades. There's a lot of stuff moving, and where it's all going to land, nobody knows exactly. But I can tell you there's 7.6 billion people on Earth, and we all need stuff. And in fact, many people are needing more and more stuff as they rise up the ranks and become part of the middle class. So, commodities, really good place to be. I think the fiscal system is suffering badly from debt. I mean, you compare now to the 1970s. Yeah, we got inflation. It looks like 1973, 74, something like that. The difference is we have a huge amount of debt, which is not the case back then. But I think we're going to see some profound changes here soon, whether it's, a reintroduction of a standard like precious metals. Don't know. There's certainly a lot of people talking about Bitcoin and, other digital currencies, maybe, but we have a lot of interesting times ahead.
Right. We will definitely be in for some interesting things before the end of this year, in my opinion. But how much of what we're experiencing, of course, I think it has a lot to do with the inability of the central banking model to actually, accomplish what it was set out to do, or maybe perhaps it is. But with the Federal Reserve looking to pull off the ultimate, I call it trifecta, which is to dial back all the accommodative policies, draw down the balance sheet, as well as raise interest rates. how much of that those policies there are you think will play a major role into where we're heading this year or not?
Yeah, it's kind of like back in math class when you get a question and it's just impossible to answer. You throw your hands up, and say, "I don't know." But look, in short, it's going to be impossible for there to be a solution here that addresses everything that you just mentioned. Okay, there's no way. There's no way they can unwind the balance sheet in a meaningful way. Okay, who's going to buy? Who's going to buy these bonds? Hey, like, right now, bonds are being sold. The international holders of our bonds are selling, and that pressure has resulted in some very serious implications here. Look at the yields, especially the longer term yields, like 30 years. Like, they're breaking out. They're truly breaking out from a 40-year channel. That is astounding. Okay. We are going to see some major shifts. This is basically, it's like reading a book, and we're definitely turning the page and on a new chapter here. Where it lands, like, central banking has been around now for a little over 100 years, and it's long in tooth. I mean, basically, the fiat money system is part and parcel of that whole picture. This debt-based system. Every fiat system has a lifespan, and usually it's about 80 years. I think this one has run its course. We've accumulated a heap of debt, and there's not a lot of options in front of us. So that's, personally, I feel where I've put myself in my career, I'm in this position in the gold space where I think, I've been waiting basically a lifetime for this opportunity to come. It's truly going to be a good time for the gold miners.
Right. I do agree. And so I'm definitely looking forward to getting more thoughts on that. And so the lifespan aspect, everything has a lifespan. And so I got obviously transition out of something old and into something new. We'll find out what's a part of that. You hinted at earlier, some of the digital luring that's going on with the Bitcoin space and things of that nature. But in getting to that point, I think we're expecting some type of correction, crash, whatever it might be called when it hits officially. You mentioned the bond, the yield curve inversion, things of that nature. It usually signals a recession. In your opinion, this upcoming event, if there is one, how will this unfold and how will this differ from prior events, in your opinion? Because usually everything sells off, including metals, and that could be problematic as well. Or could we expect something different?
Look, I think on the short term, we're actually seeing some of those effects that you're talking about. In other words, as we see problems arise, in China, for example, or with the Russia-Ukraine situation. I think that you're seeing in the sell-off in the stock market here recently, you are seeing kind of a bit of panic, and you see people, also, whether it's because of margin calls or what, I don't know, but they're also selling down commodities, at least briefly. But I think in the long haul, commodities are going to be the place to be. That underlying thesis is solid as a rock, in my view. Yes, you're going to have a lot of intestinal fortitude to get through this time, because it will be volatile. There's no question. But I think at the end of the day, given there's only so much stuff on Earth and the demand is not subsiding, I think you will see commodities do well over the long haul. The 5 to 10 years period in front of us, it's going to be very good for the commodity space.
All right, I do agree. And in your opinion, how much of the commodity space is being reshaped or repriced, rather, based upon the events happening now with Ukraine and Russia? With, it looks like Putin wants to bring ruble back into play for oil, and then gold is being mentioned, and their central bank is looking to get back in the gold, at acquisition space directly by pricing it a little bit differently than what it's currently done in the West. What are your thoughts on that?
Well, look, it is interesting. I mean, this reminds me of the period when the dollar was in flux back in the early 1970s. Now, the U.S. Had a lot of political clout at the time, and they were able to establish the petrodollar, and that's persisted for nearly 50 years now. Well, there's always a changing of a guard, when time moves on, and maybe Putin's obviously recognized a chink in our armor. I'll tell you that, so maybe he takes advantage of this. I've been watching the ruble. I've been watching it for 6 or 8 weeks now with the unfolding of things. Ruble plummeted in value early on in the Ukraine crisis, but you look since I think about the third week in March, the ruble has strengthened. Okay. You look at, they basically fixed the price of gold at $5,000, 5,000 rubles per gram. And that has had a profound effect on the value of the ruble. It's really stabilized the ruble by pinning it to gold. Boy, if we would be so bright here in the West to do that, I think you'd see some very, very dramatic things happen for the better. But unfortunately, it's not happening. We're still trying to use the political clout that we did with when we had, the dollar was the be all and end all. That's not happening anymore. It's changing. Things are changing, and I think people are not appreciative of having dollars either in the form of currency or bonds, U.S. denominated bonds, because of this situation. They see risk around holding dollars and other foreign currencies, as well as bonds and denominated in dollars. That's not good. That's not good for anyone in the West, especially. I think you will see a very, very different world in a few years.
All right, I do agree. Now, I just want to get your thoughts real quick. We are here in the U.S., we're in a political cycle again. We have the midterms coming up, and there's been a shift of the overall two-party narrative, left, right, Democrat, Republican. Everyone seems to be vying for everyone's attention, I guess, in anticipation of there being some type of change. In your current viewpoint, based upon your long-term viewpoints on politics, fiscal policy, and things of that nature, is there anything that can be done in D.C.? Will there be done anything in D.C. from a fiscal standpoint that could help, or is it too late as well, in your opinion?
I think the overall trajectory is, unfortunately, it's a bit too late. But that's not to say the immediate situation can't be improved. Perhaps we do see people who come back in and are truly fiscally conservative and try to rectify this situation. Look, the late 1970s looked quite dire. If you might be too young to remember, but those of us who were around during that period, it was rather bleak. And the U.S., on the international front, was also quite vulnerable. That we had the Iran hostage crisis in the late 1970s and stuff, and inflation was rampant. Okay, so we're kind of back in that place. It did change. It did improve dramatically in the early 1980s. The political wind shifted, and it did improve. Maybe we go back into a renaissance like that. That would be great. That would be great. That would actually be good for gold mining too, believe it or not. A lot of people say, "Oh my gosh, I want gold to be 5,000." Hold on a minute. No, what you want is you want to make good money at gold. Okay. And what happened in the early 1980s, this is going to sound very contrary to a lot of the people's, what they have in their head, their theses in their head. But when we saw a fiscally conservative government come back in the early 1980s, raise interest rates, basically shoot inflation, and it reined it in very quickly over about a 2-year period. Inflation went from plus 10% down to a more modest, say 5 or 6%. Well, the cost of production started to get under control, and you saw an era from the early 1980s to the mid 1990s, and even into the early 2000s, when the cost of production for gold in particular was fairly stable. Mining companies could produce gold for $100, $200 an ounce. Yes, gold was trading at 250 to 400 for that period, but that was good money. And we need to see that come back. If gold does go up, great. But we also need to see the stability around the costs of producing gold, come back in. Because if we're always chasing the bus here, in terms of cost, it doesn't matter if gold goes to $3,000 an ounce or $5,000 an ounce or $10,000. If diesel's like going up, doubling every year, and wages are going up every year, and everything else is going up every year, you gotta make money, and so inflation's not necessarily good for money, not 100% good for money.
Right, right. A lot of people, in the community talk about, it's a small few, but they're saying, I can't wait till this stuff blows up and gold and silver takes off, and we people who are aware and awake, who took precautions before this would be in better position. I'm thinking like, well, in the end, it sounds good, but then again, the world around you will be possibly in such chaos that it wouldn't be as comfortable as it is now. Right. But yet, as people who are awake and aware, you can do the best you can to prepare, but you can't predict the future ultimately. So we know how things have unfolded in prior times and what's happening in countries now, Venezuela, Zimbabwe. People who've protected themselves via the hedges, i.e. gold, silver, did better off in the long run. But, once again, we're in uncharted waters altogether. But as a geologist, real quick, and then I'm curious to get into, Blue Lagoon, because, you went deep, you went heavy into, I guess, your confidence in the company there. So I'm definitely going to get into that. But out of the ground now, gold to silver. We talked a lot about gold, but silver is right there. It's gold's little brother in a sense. Will the returns or expectations for silver be that much greater, you think, because it's been suppressed for so long and is nowhere near its all-time high, and not adjusted for inflation, of course? But what are your thoughts on that, real quick, on silver?
If you look at the rising gold price from January 2001 to September 2011, it went from $256 an ounce up to $1,900. It actually topped out a little over $1,900. That's a seven-fold increase. Now, silver was running about $7. And by the way, gold, it currently is about 1,900. So in other words, since the ultimate low back in January 2001, so now we're at a multiple of 7. So hold that thought. Now silver was actually hovering around this, $6 or $7 range at that same time period. Has it gone up sevenfold? No, it hasn't yet. And so it is lagging behind. Silver, funny enough, is probably more of a monetary metal than gold is. If you step back and think about it, like back in the old days when people used coinage primarily, silver was what people had in their pockets. Very rarely did you see somebody actually have gold coins. That was a lot of money. So silver coins were the common man's money. If we went back to that, if we pegged, somehow on silver, it'd be very interesting, because right now we actually have a supply deficit. We use all the silver that's produced every year. Something like 830 million ounces of silver a year is produced. I remember when people were screaming, they were saying, oh my gosh, back in the day when the camera was shifting to the digital camera and we stopped using photographic film, which was really what consumed a lot of silver. Everybody said, oh, silver's dead, done, it's dead. And you did see, a depressed silver price there. But now the industrial metal, the consumption, the number of people we have on Earth today, the silver demand is huge. Okay. And it ain't going away. So yes, I do think silver will catch up there. It's largely a byproduct of lead and zinc mining, some copper mining too. But I think you're going to see silver catch up in a big fat way. And when it happens, don't quite know. But I would say sometime within the next year to 3 years, I would expect it to double from the current price level.
Interesting. Well, thank you for sharing that. So let's dive in. And so I saw a tweet, I think about a week ago or so, and it was referring to the fact that you, as an investor in Blue Lagoon Resources, you decided to reallocate more capital, basically just showing your confidence in the company there. If you don't mind, share with us a little bit of what made you put more skin in the game. Yeah, and then for those who may not be familiar, just give us a little bit about Blue Lagoon Resources.
Well, first of all, our investment thesis is to put money into exploration companies that have district scale land packages, but they also have the geology that could prove a multi-million ounce gold discovery or silver or whatever metal they're looking for. Okay, so we have to find stuff that is kind of swing for the fence type exploration story. And I felt Blue Lagoon had that potential. Why? Because the geology, after I got to know the company a little better, and I talked with Bill Cronk. In fact, he came down here to Denver. We had an entire day together discussing the geology of the project. I became convinced that the system is one of these unicorn type alkaline gold systems that could generate, a very complex but very high grade vein system. So sheeted veins. And the thesis was simple: go out and drill some of these structural zones, in particular this chance structural zone, and see if there's a bunch of veins there. I mean, it was that simple. They've now done that. They started drilling last fall. They drilled up to the end of last year, and then they started again early this year on their 2022 program. It is year-round access, by the way. So they have drilled a huge number of holes. Why? Because they're hitting veins. They're routinely hitting high-grade veins, just like we planned. So when I see that, I like to increase the stake. I like to increase our exposure. You know, the company's doing what they said they would do. They're hitting high-grade veins. Maybe the market doesn't recognize it yet, but that all the better for us, because we can come in and increase our stake. We've done this over and over again. Okay, we have a long list of companies in which we've done this. Goliath is a great example. We came in, the company went out and drilled. Market was like, "Oh, this is new. This is interesting." Yeah. Well, guess what? We increased our stake, and now it's worth like sixfold times where we came in. I want to see the same thing for Blue Lagoon. I think we will, but I think there's a lot of upside from there too. Clearly it's going to be a significant new high grade discovery.
All right. Now, so the fact that you feel very confident in Blue Lagoon, so let us know how difficult it is. And so, as a geologist, understand the ground and everything beneath it a lot better than the average person. So, I assume that has a lot to do with your confidence in it because of what you've seen in the ground. Share with us a little bit more, if you don't mind, the details of the discoveries. I think that's a Dome Mountain project, if I'm not mistaken.
Yeah, the Dome Mountain project. Look, it resembles a few deposits around the world, not a huge number of these things, but it resembles the Buritica deposit in Colombia and the Porgera deposit in New Guinea, Kellyan deposit in Indonesia, and a few others. Okay, like there's one here in Colorado called Cripple Creek. It reminds me of that type of deposit. These are deep-rooted systems. They can go down 1.5 kilometers or 2 easily. No problem. They tend to have multiple structures. So they tend to have sheeted veins. So like one vein after another occurs in the ground, very close proximity to one another. They tend to have a pretty restricted footprint in terms of overall size, maybe 1 kilometer across. But given the density of veins and the vertical extent of these things, they can generate millions of ounces of gold. Buritica, I think, was 10 million ounces at the time Continental sold to the Chinese a few years ago. Let's see, Porgera has produced on the order of, I believe, around 29 million ounces so far, and it's got plenty of upside from there. Mm-hmm. A lot of people say, "Oh, that's a little crazy talk." Right in the middle of BC, surely somebody would have found this thing before. Not so sure myself. I think these systems, they tend to be subtle, and if people don't understand them, they can easily be missed. So, stay tuned. Maybe these guys find a multi-million ounce gold system right here in one of the best jurisdictions in the world to mine.
All right. Now, would you say that, despite all the unpleasant news hitting the globe as far as the amount of debt and all the things that from the political sphere as well as the fiscal monetary policy colliding, the mining space, where historically speaking, gold and silver being money, where it comes from, that sector moving forward will do well, will be a benefactor of all this malfeasance taking place in the monetary and political sphere because it's real, it's tangible, and it's still needed in this current time. So the mining space, in your opinion, I assume looking forward is due for, some people say, the super cycle, or are we in that now, or what do you think?
We're going into it. We're in the early stages. We haven't seen a lot of the normal things that one would expect in one of these cycles pan out yet. Okay, like they have yet to come, like the big M&A stage. We haven't seen that yet. Yeah, we've seen some M&A lately, but not like you would expect in a full-on boom. And I think that's still a year or 2 or 3 away. Don't know how far. Maybe it's 4 or 5. I don't know. But we're in the early innings. We're seeing junior companies, especially explorers, starting to get traction in terms of their share price here just lately. Yeah, they started to creep up. Look at some of the indices like GDXJ and stuff. They started to break out. Yeah, they pulled back in the past week or so. It was, like gold is the classic, sucker punch kind of investment here. Monday last week, so about 8 days ago, gold touched 2,000. Everybody was like, "Game on, booyah!" We're all ready to rock and roll here. And by the end of the week, it's back down to 1930, And then yesterday and today it's down to 1900. It's not the end of the world. Okay. It's a pullback. But it doesn't just go straight up. So you got to understand that if you're investing in this space, but over the long haul, what you said earlier is exactly right. The gold miners should do well. If you see gold prices outpace the cost of production, and then the cost of production at some point in the future is stabilized, such that you have high margins in this industry for a long period, you'll see a new generation of gold mining. And what do the miners need? They need discoveries. Okay, the junior companies, these companies like Blue Lagoon, they're making discoveries that are going to be the next generation of mines for the miners.
Interesting. Well, Quinton, as always, it is good to connect with you to get your thoughts on where we're at and where things are heading, and as well as updates with Blue Lagoon. If you don't mind, was there anything I missed, perhaps, that you might want to bring to the forefront with Blue Lagoon? Anything, future expectations? Anything coming up that's worth noting?
Well, I guess the one thing I would say is I think they have a lot of holes, maybe on the order of 40 holes in the laboratory right now. It is often, it's very seldom that you see, I should say, it's very seldom that you see a company drill that aggressively such that they don't have assays in hand so that they can, judge and, reorient their drill program going forward. But what it tells me is the geologists there must be seeing very good evidence that they have, they continue to hit these veins. So I'm very optimistic that in this next round of holes that they have coming over 6 months or so, we're going to see a lot of news coming out of this company. That's good. Very high grade results.
All right. Sounds good. Well, once again, I appreciate you for taking time to join us. And of course, I'll probably have Raina Vig, the director over there, on again. And of course, I'll put all the information for Blue Lagoon beneath this video here. But other than that, it's always good to connect with you and continue to stay at it. And hopefully have you on sooner and get your thoughts on where we're at, and also keeping us plugged in with what's coming out of the ground. So I think a lot of people on this channel are definitely interested in finding out. So once again, thanks for joining us on RTD Interviews.
Thank you, Mike.